Hi everyone, Ryan here, Ion Capital Solutions. Hope you're doing well. Today I want to talk to you about why consolidation loans typically don't fund. Believe it or not, consolidation can be a very negative word when it comes to business loan brokering. And far too often we get excited about the large borrowing amount, right? The large loan amount. They say I want 150, 250, 500, whatever it is, however much money they want. And we think this is a big loan, this is a big commission, right? However many points I'm going to charge, you get all excited. But when you hear the word consolidation, red flags should be going up left and right, okay? You're going to come across this a lot. So definitely tune in for this video. Let's talk about it. Okay, so here's why consolidation deals don't fund often, okay? We're going to walk through and hit a few points on the topic and help you identify problematic deals. And the second you hear the word consolidation, know where to drive the narrative and what questions to ask to ensure that you actually have a deal on your table and not a complete and utter waste of your time, okay? So with that being said, a great place to start is just to quickly just discuss what the consolidation product actually is, right? And it helps a business owner pay off additional loans and narrow down repayment of loans into a single payment, right? That's just the most basic definition of it, excuse me. With that being said, understand that consolidation is a negative word, okay? And you should immediately be skeptical. And the reason that you immediately want to be skeptical is because it really comes down to if they can't afford their existing loans and the payments are putting pressure on them, then why would a lender think that they could afford another loan or a larger loan that would be able to pay off that existing debt and come into a first position, meaning the only loan, the first loan, right? Positions are the number of loans, right? So the first loan you took is your first position. The second loan you take, if that first loan is open, right, is now your second position. The third loan you take, if those two loans are open, is your third position. And that's essentially how it works. But with that being said, it comes down to affordability. Can they afford a loan in the first place? Could they not afford the loans that they were already given? Right? And if that's the case, if they're struggling, then what makes the lender think that they're going to be able to afford to pay off this loan? Do they just want to get in line, pay off somebody else's debt, and now the debt is owed to them, and now the client's going to struggle to pay them back, and they have no other options, so they're going to default on the loan? If you see where I'm going with this, this is why it can be a very negative conversation. Now, don't get me wrong. There are business owners that can make use of a consolidation product, but you have to understand the difference between a fundable client and a total waste of time. And if you don't, you're going to spin your wheels on bad data. And spinning your wheels on bad data is the struggle for business loan brokers. We have to understand how to identify the gold, right? With that being said, it really comes down to affordability, and you may have seen this in some of my other videos, but 16 to 18% of the monthly gross revenue and payments at a maximum for any business is what lenders will allow in repayments of loans. So if a client, a business owner is already beyond this amount in payments and they want to borrow money, the lender's just going to be like, they can't afford the loan. They can't afford these loans. They're going to go out of business. It's just a waste of everybody's time. Right? Now, there is an option, and I'm going to get to that towards the end of the video, but understand that. Understand that, right? That you may be just complete and utterly wasting your time. That client may be completely and utterly over-leveraged because they can't afford it. Okay? However, on the flip side of this of things, if the client is, say, only making payments in roughly 10% of their monthly gross, but they have multiple loans and they just want to consolidate into one payment, then sure, yeah, let's do it. We can help you. But you have to understand the difference between the two. It's very, very important. Okay? And this is what is going to help the lender determine whether or not they want to offer the loan. This is what will help you determine whether or not to even submit the deal in the first place. Right? So with that being said, it's so important to just pre-qualify your clients. And we always talk about this on this channel. Qualify, qualify, qualify. Right? And so make sure the client is not over leveraged, right? We just touched on that. Make sure the client hasn't missed payments. That's another bad sign. If looking through the bank statements, the lender can see that there's a daily or a weekly payment, and all of a sudden there's a disruption in that payment. A couple days, business days goes by, and there's no payment. A couple business weeks go by and there's no payment. What happened? Why did payments stop? Right? Did you pay off the loan, or did you actually miss payments? Right? That shows they can't afford to repay a loan. If they're not repaying a loan, why would somebody else give them a loan? Right? Same thing with stopped payments. If they put a stop or a block and they didn't pay off the loan, that means they've defaulted. If they've defaulted on the loan, they have no intention of paying that loan back. If they have no intention of paying that loan back, why would anyone else give them a loan? Right? Put yourself in the lender's shoes. Imagine for a second, you and I are standing side by side, we're friends, and somebody comes up to me and says, "Hey, Ryan, can I borrow $20?" And I say, "Sure, here you go, pay me back." They never pay me back. They decide that they're not going to pay me back, and then they walk up to you and say, "Hey, can I have another $20 so I can pay Ryan back?" Are you going to be dumb enough to give him that loan? Of course not, right? So put it into perspective. In any event, make sure the client is not going out of business. This is also very, very important, okay? If things don't look good, right? The business is in trouble. They're going out of business. That's not a good sign for lenders. That's a great sign of default, stop payments, lost money. Does the lender want to get their money out the door and get it back in the door with interest to then get it back out the door again and keep accruing wealth? Of course. Do they want to give their money to somebody who's just going to run away with it, never pay it back? Absolutely not, right? Very straightforward, but ask yourself, are you asking these questions? Do you understand how this process works? Or are you just getting excited because the client said $200,000 and immediately just collecting docs and forwarding to the lender, right? With that being said, make sure the client also has assets. Okay, when we're talking about consolidation, securing a loan with an asset is usually the only way to consolidate large balances through either a lien or a cash out refinance. So if they own a piece of property and they want high risk consolidation, right, which is basically a cash advance, right? They're going to place a lien against their home based on the equity they have in that home, right? You got to have ownership of, in other words, equity in the property, not a newly purchased property. You can't leverage that. But with that being said, they'll place a lien on that property for the loan, say, okay, here's what we think you can afford. Here's the money. Good luck. If you don't pay it back, we're going to take your house, right? Or if they own property and they want to do an actual cash out refinance, they can do that as well. It's a much, much cheaper product if they qualify. They have to qualify. They can get it at a single digit interest rate, far, far better. But when you're dealing with a high risk client with really bad credit, over leveraged, and they ask if they have real estate, because that's really the only saving grace, right? And if you ever have a client who wants consolidation, but they don't want a high cost, qualify them and make sure that they can afford a cash out refinance, right? That they have the credibility, whatever it may be, and an asset worthwhile, okay? Whatever options are available. But that's how you get them out of debt and into a single payment, right? Is to help them in those two directions. But again, to my point, you have to really know what you're contending with and what you're dealing with, if they can afford it. Very, very important. What options are available, what cash flow looks like, what assets look like, so on and so forth. But again, high risk consolidation is extremely expensive. It's basically a cash advance with an extended term. So, World Business Lenders, right, offers a consolidation product. Don't get me wrong. Nothing wrong with World Business Lenders. They serve their role, and they help businesses get out of trouble by providing consolidation loans, right? They're very expensive, right? They can go from generally expensive to outrageously expensive, but it's an option for a client who's really got no other choice and needs the money. Okay, but understand what you're providing your client. Let your client know ahead of time what's coming, right? And how it actually works. And you got to make sure that they actually qualify. But when you talk consolidation, this is the world you're playing in. And you have to understand that and know that. And you have to understand what's realistic and what's not. And that's a bit about what we're discussing today. But what I want you to walk away with is the understanding that you have to respect your lender partners and you have to understand your role. There's the private money lenders, and then there's you as a business loan broker. And private business lenders, their goal is to both lend and protect their capital, right? Lenders want to lend their money and see an ROI. Yeah, sure, but not at the cost of default, right? They want to make sure a borrower is a good bet. So you have to understand what a good borrower is from a bad borrower, what deal makes sense and what deal doesn't make sense, because otherwise you and your lending partner and their underwriting and processing team, your underwriting and processing team, which you should have as a business loan broker if it's not you doing it directly, is going to waste their time on bad data if you're not upfront qualifying your client and understanding what's doable and what's not. And as a business loan broker, understand our job is to bring qualified clients to the table, not to refer unqualified clients to lenders and hope that they're going to qualify them. That's not business loan brokering. It's not how it works. Okay? With that being said, we don't get paid for over-promising and under-delivering. So if you're saying to clients, yes, I can help you, send me the docs and forward it to the lender, you're over-promising, you're under-delivering. You have no idea if you can help them. You have no idea what they're going to get. You want to know what they're going to get. You want to be the expert. That's what makes you a professional loan broker, okay? Understand, we don't get paid if we waste our time on bad files. So are you wasting your time on a bad file? You should know. If you don't know, find out. Learn more about the business and how it works. Because the reality is, we get paid when our clients get funded, and it's just that simple. And if we don't know whether or not our client's going to get funded, well, then how can that be a business that we're going to rely on or provide for our families with? It's just unrealistic, right? So anyway, here's some great information about consolidation loans and how you can better position yourself in your calls when talking to clients about them, whether or not that product is actually available to that client, whether or not it's somebody that you want to continue to talk to, or maybe it's time to get off the phone, right? In any event, thanks so much for your time. Really appreciate it. Good luck with your deals. I'll catch you in the next video.